inside look at the company that rules the world. How does a company amass control over a staggering $10 trillion? To put this in perspective, that's equivalent to half of the United States' total gross domestic product. And hey, we are not talking about Microsoft, Apple, Meta, or even Alphabet. This is a company you have probably never even heard about. We are talking about BlackRock. How did they achieve such unprecedented success without a traditional business model? Let's find out. The trillion-dollar empire. Back in 1988, BlackRock started its journey as a risk management and fixed income institutional asset manager. But today, it's not just a big player. It's the granddaddy of them all, holding a whopping $10 trillion in assets. In 2012, Ralph Schlosstein, the brain behind Evercore Partners and one of BlackRock's founders, called them the most influential financial institution in the world. And he's right, because as of today, BlackRock is everywhere, with 70 offices spread across 30 countries, catering to clients from a whopping 100 countries. In 2014, The Economist affirmed their dominance, declaring them the world's biggest asset manager, surpassing even the massive industrial and commercial bank of China. But it's not just about the numbers. BlackRock is like that cool player investing in all sorts of things. They own a piece of the action in Europe's big players, energy, oil, and gas, and the big banks. It's like they've got their fingers in all the pies. How did they become so big? BlackRock began in 1988 after Larry Fink, Robert S. Capito, Susan Wagner, and a team of financial whizzes parted ways with the First Boston Corporation to launch their own venture. Back then, Fink, who'd felt the punch of the 1987 stock market crash, was on a mission to create a company that would guide folks through the financial maze with confidence. At first, BlackRock focused on fixed income investment services for institutions. However, its horizons expanded rapidly to encompass diverse asset classes and investment strategies. By 1999, BlackRock took a leap into the public arena, with shares hitting the New York Stock Exchange, making the dawn of a new era. This pivotal moment triggered a series of strategic acquisitions and partnerships, propelling BlackRock to the forefront of the global financial stage. In 2006, the acquisition of Merrill Lynch Investment Managers significantly boosted BlackRock's assets and global presence. When the financial storm hit in 2008, the US government entrusted BlackRock with the crucial task of managing the $130 billion debt settlement of Bear Stearns and American International, preventing a total collapse of the US banking system. BlackRock's ascendancy continued, with the company taking on the role of the decision-maker during the financial chaos. It became the world's top asset manager by 2009, growing organically and through strategic acquisitions. The Sovereign Wealth Fund Institute reported in 2014 that 65% of BlackRock's assets were in the hands of institutional investors. By June 30th, 2015, BlackRock managed a staggering $4.721 trillion in assets, holding substantial shares in major institutions like German Commerz and Deutsche Banks, Goldman Sachs, HSBC, Bank of Ireland, Société Générale of France, and more. BlackRock emerged as the largest shareholder in these influential entities. Notably, BlackRock made history by becoming the first global asset manager to secure approval from the Chinese government for operations within the country. The company strategically invested clients' funds in a plethora of publicly traded companies, including its competitors. Surprisingly, it skillfully sidestepped anti-monopoly regulations. But how were they able to do that? Anti-monopoly regulations. BlackRock cleverly avoids getting caught up in anti-monopoly rules because, get this, they don't technically own the companies they invest in. Let's break it down for you. BlackRock is like the big boss investor in companies like BMW, Volkswagen, and Ford. But here's the twist. They don't fully own these companies. So, on paper, these car giants are still rivals, even though BlackRock holds a ton of sway on their boards of directors. Now, hold on to your hat because it gets even more interesting. These car companies, the ones BlackRock invests in, also turn around and invest in BlackRock. It's like a financial loop-de-loop. With BlackRock's mega-sized funds, they pop up as the top shareholder in many big players, like the tech giants Apple and Microsoft. When there's a big takeover in the works, companies usually check in with Moody's, the credit rating experts, to see how financially fit they are. Guess what? BlackRock not only invested big in companies, but also in Moody's. So, if BlackRock is eyeing a takeover or investment, they're essentially asking a company they own to assess how creditworthy another company is. Not exactly corruption, but it's a bit of a crafty move, right? Shadow bank. BlackRock dances to its own financial beat, not just banking on dividends, but thriving on the art of buying and selling investments. BlackRock doesn't merely hold the assets, it manages the investments of its investors, who, thanks to BlackRock, are big players in various companies. Now, here's where the magic happens. BlackRock's grip on these investments allows them to play with the risk values like a seasoned magician. This financial wizard doesn't just roll with the punches, it dictates the rhythm of global financial movements. Whether a company's shares take a nosedive or shoot up like a rocket, BlackRock is right there, riding the waves of speculation. Besides having Moody's in its lineup, it also boasts one of the biggest financial data processing assets, Aladdin. So, BlackRock is practically sitting at the information hub of global markets, knowing the ins and outs like no other. BlackRock isn't your typical bank or investment company. It's the Enigma Asset Management Company. In official jargon, they call it a shadow bank. Why? Because it waltzes around regulatory controls, dodging labels that could clip its wings. Even with its massive financial structure, BlackRock is still subject to criticism. Negative impact. In May 2019, BlackRock faced huge criticism for the environmental impact of its investments. It is one of the top 3 major players in nearly every significant oil company, with only Total managing to escape its grasp. But it doesn't stop there. BlackRock comfortably sits among the top 10 shareholders in 7 out of the 10 largest coal producers. That same year, BlackRock claimed the title of the world's biggest investor in coal plant developers, holding a staggering $11 billion in shares among 56 of these developers. This prompted environmental groups to sound the alarm bells, labeling BlackRock as the biggest driver of climate destruction on the planet. It's a heavyweight title that no one wants, but even with that, they are too influential to be easily challenged. What are your thoughts on the immense power that BlackRock possesses? Let us know in the comments section below. See you in the next video.